There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
All right, welcome everyone to the Saturday software strategy session. And this particular Saturday, it's going to be a quick one, like really quick, like everybody's going to head spin. Geez, hey Steve, you usually ramble on for an hour about all kinds of macro-based stuff and sometimes meaningless crap. Yes, that's true. But we're going to talk a little faster than normal today because I got to take off to a bike race with my kid. In any case, so gonna play a video for everybody. And the purpose of these casts are to educate one, not to be an alarmist, right? I've always tried hard to not be an alarmist. I really need to hear the sound, but what you're essentially looking at is more developing craziness in China. Is basically blocking off one of the big state banks and not allowing depositors to withdraw any funds. China's also been stockpiling a lot of, get back to the Forex fund. They've been stockpiling a lot of food and doing rationings. It's been acting really weird as far as a country hunkering down. Now, one could say, well, Steve, you're being an alarmist, and hey, maybe nothing's going to happen. But what if I'm wrong and something does happen, right? I don't necessarily think it's going to happen next week, but there's some just strange signals coming out of this country that, maybe they're about to do something big like invade Taiwan, right? So I can promise you this, if something like that happened from a risk management standpoint, obviously I always joke I could be wrong, right? I'd imagine the currency markets would be completely haywire. So in that particular case, it would probably turn the trading system, both manual and automated, off and go take a break for a week till things settle out. Because just like when knucklehead Putin and his cronies invaded Ukraine, things were a little bananas for a while. So probably best advice to just get away and save capital. I do remember one of the best pieces of advice I've ever gotten from big traders is that cash is a position. Oh, well, you're not trading, you're not doing anything if you're sitting in cash. Nope, cash is a position. Okay, whether you're earning any money on it depends on the institution you have your money with, right? But it's still in a position of protection, right? So protection of capital, I think, should be a course that, honestly, if I was running a university curriculum and I was putting together a syllabus or some sort of course-based study on trading, like I used to do, I would start off with risk management as the main piece, and then a macro-based education. Whether or not traders want to hear a lot of that or not is usually no. Why are we focusing on this? But it really is just to start at the very beginning from that. So for this particular short week's cast, I'm actually going to step a little outside of the box and pay a tribute to one of my favorite people of all time from a socialite standpoint, and I will dedicate this cast to Ivana Trump, who I really admired as a person because not only that, she was hilarious. My favorite Ivana line was, and this was she was getting out of some limo. She's in the process of divorcing Trump. This is like way back in '92, and she she got out of the limo and looked right at the camera. She's like, they're like, how are you going to handle this? How are you going to stand on your own 2 feet? The divorces. And she looked at him. She said, darling, don't get angry. Get everything. So, and she did. Not all of his money, but she went out and started all kinds of cosmetic businesses, and she did really well in the face of all of that. So even when the world, probably in this case socially and relationship-wise is going to hell, she turned lemons into lemonade. So she had all kinds of famous lines in the media, and as a probably one of the toughest Czechoslovakian-born immigrants that I at least knew, from a mostly just a television interview perspective. I met her once, this is a while ago. But in any case, let's get back to the Forex calendar. So next week, what's the big deal? The big deal is Fed next week. All eyes in developed markets on this planet are going to be on Jerome Powell and the Fed. Wednesday, July 27th is the Day of Atonement. We don't know what they're going to do. Fed funds rates will tell you that 75 basis points is baked into. I think that probably one of the, just double check the mic here. Looks like the mic cut out. Let's go back. Losing my train of thought. I think it's if I was like a prognosticator on the street, I think that I wouldn't get as caught up in what the Fed's already going to do. I would be spending at least a chunk of the time on what's going to happen in the future. Why is that? Why does that matter? Because markets are forward pricing mechanisms, meaning that if it is a market that we can all agree upon that is a efficient market, that means that all of the news is currently baked into price, right? Now, there can always be surprises, no question, right? There's obviously been a whole host of earnings coming out from individual companies globally that have surprised the marketplace, right? But from the standpoint of understanding usually what central banks are going to do, some guide more than others. The Federal Reserve's guided more recently than other banks that have come out and surprised, like the ECB last week with a 0.5 point rise. Typically known information or unknown information is usually fairly baked into the markets, right? Your biggest risk is not knowing something, it not being priced into any of the global markets, or like a VIX index is a measure of volatility or something like that. Your unknown is what nobody else knows, right? You don't want to just get caught. It'd be like going in for, and this actually happened with one of our big upline insurance partners. He went in for a routine physical that one of his friends actually kept pushing him to go get. And thank God he did. It basically saved his life because he came back with a stage 4 prostate cancer diagnosis, right? And he's okay now, but he's had to go through a whole bunch of surgeries and one hell of a rot in the last 6 months. So that's an example of something that was an unknown. Then I guess the moral of the story, if you're over 50, right, get in and get physicals. But the unknown really here, in my opinion of this, and this is sort of a long trail I'm going on, is what the Fed's going to do. So some, especially if you listen to Alf, Macro Compass, a couple other guys that I've sort of guided you to, Tommy Thornton, Hedge Fund Telemetry. There's a few other guys I follow and converse quite a bit with on Twitter, DiCarlo, Cassio in Italy. They think the Fed's going to pivot. Now, I don't know enough like these guys do to to spend hours writing a research report. I just don't have the time. I mean, my job essentially is to come in and just skim off the top of what's going on and try and discern, what kind of strategy I'd put in place for the week based upon that. But I always advocate getting together and sort of putting a collaborative effort out for whatever you do, right? If you're a soccer player, the smart move is to know where all the best soccer players and coaches are and, get to know them, become friends with them, collaborate, train with them, right? Get to know where the best traders are. I sought out before Twitter a number of traders that I heard about around across the country. A couple were at Goldman Sachs at the time, so a while ago. And I actually sought them out. Two of them blew me off, and one of them I still talk to, and we travel with our families to this day. So I think it's important to always try and be a sponge and find out who the best is at anything you're looking to accomplish, right? That's why I try and recommend some of these guys. No, I have nothing to do with their newsletters. No compensation. No conflicts of interest. But in any case, if the Fed decides to pivot, what does that mean for us? That means that, well, we all thought the Fed was going to raise, 300 basis points, which is a big move. It would be completely counterintuitive to the last 2 decades, right? But it was to basically quell inflation, which is coming down, right? I think inflation was a short-term phenomenon that was based primarily on supply chain disruptions that were caused from the pandemic, right? And other factors, what I like to call pin action off of that. So if in fact inflation comes back down, why would you move to 200 to 300 basis points, right? We've already moved a bunch. I think the Fed may raise next week. It's baked in. There'll probably be some big reverse moves off that. Just keep in mind, as an equity trader, typically whatever move is exacerbated the day the Fed makes a much bigger interest rate decision. Now, we haven't had a lot of close history to go on based on this, but in the past, the move that took place after the Fed made policy and or interest rate decisions permanent and announced it, there was always an exact opposite move that happened the next day. So if it took place on Thursday or Wednesday, which is typical, the move on Thursday from this Wednesday decision is usually the exact opposite. Okay, it doesn't mean that's going to happen. This is strictly just an equity land trading insight. But I don't know. We'll see. I think what would surprise the marketplace is the Fed only raised 50 basis points and put out some sort of pivoting statement like, hey, we may be done. That would probably be a death knell for the dollar. So which means that this ridiculous meteoric rise that the dollar's been on, let's take a look at that, by the way. We're going to skip past all the FinViz stuff and just go right to TradingView. And this is almost like a weekly chart to explain how much we've moved, how far. Put this in perspective. Probably a good chance that we come all the way back down to this area. This is the big level of blast off, if you will. Small, sloppy cup with handle, but boom. This 102 area is right around support. If in fact I am right, and I have certainly could be accused of having a whack thesis that I'm presenting today, right? We'll know. I haven't really paid enough attention to be out there, ringing my bell at the top of the hill with my particular thoughts. It's just sort of a hunch. Could be wrong. And let's take a quick look at a few other things. Parity is no longer, but close with the US dollar and the euro. If you don't know what parity means, it's dollar for dollar, where your currencies were almost perfectly aligned, right? So you had a small window to go on a trip to Europe if you're a US resident. Just kidding, you can still go. It's much more affordable. I think, there's probably plenty of entities out there in travel land that haven't changed any of the prices, and they're still going off a dollar 114 euro, right? Which is back up here. But just know that these levels I've talked about a lot recently, this 107 area is essentially the ceiling. And then we've just moved down from there. Wouldn't surprise me to see us go back to this level and start building some sort of higher base, possibly blast off higher. The other sort of strange tool in your toolbox, right? There's an analogy for you. So what if there's a settlement in Ukraine? But craziness going on in Asia. I don't know. A lot of headwinds. You can always make that argument, obviously, and it sounds like an alarmist type morning from me. So I don't know, maybe I'm in a rare alarmist mood. But in any case, it's all about protecting capital and trading correctly and against any of the craziness that one may have in their brain. Always trade with sanity based on core research and with a process. All right, what else? Keep in mind all these times are Eastern Time, US. US CAD still in range. For once, remember these are weekly charts because we're just giving the true big picture. Yen may have actually topped for a bit. Who knew? May. Skipped over GBP. Here we go. Keep on his weekly charts. Each candle represents a single week. Red down, green up, right? GBP CAD, this is the neo currency here, broke out from a very long pattern of sideways trading in a tight range. It's 167.30-ish area. Is the ceiling. Gold, anything, unless you're trading this, anything other than a daily chart is just full of noise. I prefer to go to weeklies. You see much more of what's going on, but broke through a pretty big area, not last week, but it's just in its move currently in the last 3 weeks. Long-term trends right here. And this is almost perfectly not only a touch of a outer band, which measures, heightened volatility or sort of a stretched area. Doesn't necessarily mean it's going to reverse at this area, but touching the band at this point is also the longest term trend line. I think pricing on gold has been quite disjointed, but dollar higher, gold down. That has been the plan. Typically, that's the case with an environment where you have a flight to safety, but usually with a flight to safety, you have a rise in at least most precious metals, gold typically being the front runner on that. Oil, again, we had a, let's see if I can, hard to see this. So we had if you trade this, we typically don't recommend this among at least most traders I run with because trading the CL futures markets is typically the widowmaker for a reason. But this 94 area has emerged as support over the last 3 weeks. Thought that'd be relevant. We haven't seen any of these lines in a while. Could be some support. Crypto still hovering around this. Everybody knows where I kind of stand on this. I see we say one last blast down to that 10 to 12,000 area, and that could be it. Ideally, that's what I'd like to see play out for a possible entry for the first time ever for Steve-O as a buyer of the Bitcoin-ness. By the way, I think on Twitter, I'm not going to log back in, I forgot. I think on Twitter I retweeted Probably one of the best descriptions I've ever heard of blockchain and Bitcoin. It was presented to, I think it was the House Financial Services Committee, if I'm not mistaken. This wasn't anything recent. Let's see if I can find that. It was actually a really good. I think it was probably, if you want to do, forget it. It's kind of a wild goose chase here. See if I can find that for you guys. Should have retweeted it. Actually, I don't think I did. In any case, the guy really went into just like a lot of human-based reasons why he felt that Bitcoin could be something of a true store of value versus just a open frontier of digital currency, as many think. And do understand this. Um, we have a lot of millennials that listen to this cast, and some of our clients, obviously, some of our outside advisor partners, obviously, a lot of management of Auvoria. The thing you guys should all know is that in everyday life, at least among the wealthy, which is primarily the way we run at First Down with a lot of our client base, they don't think about crypto. I think that this probably comes as a surprise to a lot of millennials, but it doesn't even enter into everyday life. And I mean, it may be something they talk about when they're playing golf or they're sitting at the club or, some sort of party or a cocktail, whatever. But outside of that, I don't think many of them even give it a thought. They don't own it. I don't get asked about it, right? Doesn't mean that that can't and won't be the case down the road, right? I'm just telling you in the current climate, I think that a lot of people get caught in their own bubble, right? We see this a ton. This is a big risk story and sort of like moral of the story type thing because um, I can't tell you how many times I'll come into somebody that just does really well. You see this a ton among entertainers and actors globally, and they just start believing their own bubble, right? It's like you just believe your own bullshit, and you're not willing to take a step outside and really put a hard look at how does everybody else view you or view your views, right? And that's why I often joke, well, I could be wrong. And I have been wrong, and I'll continue to be wrong, right? And the fact that I think that I'm not necessarily any God's gift to any of this stuff makes me humble enough to take a step outside of whatever BS I try to create in the past and look at sort of outside of my bubble, right? And the moral of that story in crypto land has led hopefully a few smart traders to not load their entire net worth in it because some of the ones I've seen that just got caught up in the bubble, they put every damn dime they have into crypto and now they're broke, or in two cases they committed suicide. I mean, it's nuts, right? So do yourself a favor and don't ever fall prey to whatever the mania is, right? Because I can promise you, from the standpoint of a trader, the mania, it's already been priced into that market, especially if it's an efficient, actively traded market, right? If it's some open frontier, it's anything goes, right? So that statement's not true. But if it's anything where it's a priced in or efficient market, people have already thought about that. It's already been baked in. Go outside of the box and think about something else that can affect it, right? In any case, I'm of the believer that one cannot be caught up in their own BS. Think outside the box. And I'll leave it at that, guys. Have a great weekend, everybody. Be well, safe, take care of each other, train and coach each other. Trust me, if there is one thing that can improve one's life from a karma perspective, I take this from complete firsthand experiences that, at least in the latter part of my life, the fact that I spend much time coaching and training and all kinds of stuff, and heck, we do it for all of our outside advisors at First Down. It has come back to pay me and us, our firm, in spades. So, from a karma perspective, whether you believe in that crap or not, if you seek out and go on to the world to help, in many cases, it will come back to you tenfold. Have a great weekend, everybody. May the trades be with you.